Good morning, investors. Today, the US stock market faces a decidedly bearish outlook, navigating a challenging macroeconomic landscape. Key drivers include persistent inflationary pressures, a surprising contraction in GDP, and a mixed labor market picture, all while the Federal Reserve maintains its current interest rate stance. We saw CPI, PPI, and core PCE all tick upwards, signaling entrenched inflation. Alarmingly, GDP contracted by negative 0.5%, a stark reversal from previous growth. While non-farm payrolls showed robust job creation at 73,000, the unemployment rate also slightly increased to 4.2%. Manufacturing is in contraction, and services are barely expanding, painting a picture of slowing economic activity coupled with rising prices. Major indices such as the S&P 500, DJIA, and Nasdaq, despite recent rallies to overbought levels, are now showing signs of reversal and weakness, reflecting the growing uncertainty. This environment suggests a defensive approach, with potential for further downside if economic data continues to deteriorate. The S&P 500 is currently exhibiting signs of a bearish reversal. Despite a recent strong rally that pushed the RSI to around 69, indicating an overbought condition, the last candle appears red, closing near 6,466.92. Both the MACD and stochastics have shown bearish crossovers from overbought territories, indicating a loss of upward momentum and a potential pullback. Immediate overhead resistance is seen at the upper Bollinger Band around 6,503, with key support at the middle Bollinger Band at 6,428 and further down at 6,353. Volume, while stable, lacks strong buying conviction. This technical weakness, combined with today's negative economic data, points to a high probability of further correction for the S&P 500. The Dow Jones Industrial Average is under increasing downward pressure, caught in a consolidation phase after a strong rally that pushed it close to its upper Bollinger Band at around 45,630, closing near 45,626.75. The last candle is red, signaling a potential turn. Technical indicators like MACD and stochastics are displaying bearish crossovers from overbought levels, mirroring the S&P 500's signals. Trading volume appears subdued, reflecting a cautious stance among market participants and a lack of strong buying conviction. The robust non-farm payrolls data provides some underlying support, but the overall economic picture of contracting GDP and rising inflation is likely to lead to a defensive shift in portfolios, making it challenging for the DJIA to sustain upward momentum against overhead resistance. The Nasdaq Composite, heavily weighted towards growth and technology stocks, shows a mixed picture today within a broadly bearish environment. After a strong bounce in recent sessions that pushed the price above its middle Bollinger Band, the index is experiencing a minor pullback, closing near 21,496.53. The price is currently holding above the middle Bollinger Band at around 21,481, which acts as immediate support. While the MACD lines remain in a bearish crossover with a negative histogram, the stochastics have shown a bullish cross from oversold territory and are moving upwards, indicating some underlying recovery momentum from recent lows. RSI is around 55 in neutral territory. Trading volume remains relatively steady. However, given its sensitivity to interest rates and economic growth, the broader macroeconomic data, particularly the contracting GDP and persistent inflation, poses significant headwinds. Despite the short-term technical bounce, the fundamental growth concerns suggest the Nasdaq will continue to face challenges in sustaining a strong upward trend, with resistance at 21,930, upper Bollinger Band. The VIX, often called the Fear Index, closed today near 14.23, a slight decrease for the day. It is trading below its middle Bollinger Band, around 15.28, and nearing the lower band, around 13.74. This places it firmly within the complacent regime, below 15, suggesting a reduction in immediate market fear. Technical indicators confirm this trend. The MACD shows a bearish crossover with a negative histogram, and stochastics are sharply declining and approaching oversold levels, indicating further potential for decreasing volatility. While this might suggest a temporary calm, the broader economic data, particularly the GDP contraction and persistent inflation, introduces a complex dynamic. Investors might be interpreting the current situation with less immediate panic, potentially due to the Fed holding rates steady, or perhaps a belief that the negative economic news is already priced in. However, this subdued volatility could also precede a more significant move if the economic picture does not improve, creating a calm before the storm scenario. For now, the VIX signals a reduction in short-term market anxiety.
Turning to RMBS, ticker RMBS, the stock is currently trading around 73.77, experiencing a slight pullback of 0.53% today. Technically, RMBS has shown a decent bounce after testing its lower Bollinger Band earlier, and the price is now holding just above its middle Bollinger Band, currently at 73.57, which acts as immediate support. The Bollinger Bands themselves appear to be tightening, often a precursor to a significant price move. Looking at our momentum indicators, the stochastics are showing a strong bullish signal, with the K% line at 69.31 having crossed above the D% line at 56.83 and moving upwards from oversold territory, indicating robust short-term buying pressure. The RSI is at a neutral 54.19, also showing an upward trajectory. However, the MACD still presents a clear bearish crossover, with the MACD line below the signal line and the histogram firmly negative, suggesting underlying bearish pressure persists despite the recent bounce. Volume appears subdued, which could limit the strength of any sustained upward move. For RMBS, watch the middle Bollinger Band at 73.57 as a key support level, with overhead resistance at the upper band around 78.71. The immediate outlook suggests a short-term upward bias driven by stochastics, but the underlying bearish MACD and broader markets' bearish sentiment warrant caution, indicating a neutral to slightly bullish short-term outlook with risks. Turning to recent news concerning RMBS, we have an article titled, "Here's How Much You Would Have Made Owning RMBS Stock in the Last 20 Years." This piece, published a couple of days ago, highlights the impressive long-term historical performance of RMBS shares. It's a retrospective analysis, emphasizing the significant returns investors would have generated by holding RMBS over the past 2 decades, often outperforming the broader market. While this isn't a forward-looking catalyst or a direct driver of today's price movement, it does underscore RMBS' consistent ability to create shareholder value through its innovation in semiconductor IP and memory interface technologies. The market reaction today, which is a slight dip, appears to be driven more by the broader macroeconomic concerns rather than this historical performance review. For future outlook, while the past performance is notable, investors should focus on RMBS' ongoing product development, licensing agreements, and financial results, especially in the context of the current challenging semiconductor and economic environment, to gauge its continued growth potential. The long-term track record provides a positive backdrop, but current market dynamics require careful attention to fundamental developments. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.